is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Hey, what's going on, guys? This is Jacob Shoup filling in for Tom O'Brien today. He'll be back with us tomorrow. We have a lot going on today, actually. We have Steve Rhodes on the next segment, and then we have Tim Ord as well. Let's take a look. We're actually green today. All right, obviously the Fed came out yesterday, and it was actually a bit more dovish than I had anticipated. Rates are staying the same, but they're reducing quantitative tightening. Okay, so we can talk about that a little bit, but first let's just run through everything we have right now. We're up about 1% in the E-mini as it stands currently. The Russell's up about 1.84%. The NQ's up 1.31. The Dow futures at 0.9%. Gold contract. Gold was a little bit red earlier, but now we're trading up slightly. We're at 2,314. It's testing the lows, but on lighter volume. It's a good sign for gold on the longer term. Of course, Tim Ord will be on later, and I'm sure he will speak on gold. Silver at 26.91. See some interesting movement down here again on light volume, and then copper right back in that 450 area. Crude oil continues to decrease. There was just more supply than I think people had anticipated. Now, again, you have Russia getting hit. Now, they had the most oil exports in April than any month before during the war, which is interesting. It'll remain to be seen how long that continues, especially with a lot of the refineries being bombed by the Ukrainians. Of course, crude oil is at 79.14. Yesterday, I was looking at maybe taking an entry into Gush, which is bullish oil. Let me take that up real quick. From direction up slightly right now, but we'll have to see what happens with it. As it stands now, though, crude is trading well below that 80 level. Of course, the high we had for this year was 87.67. We're trading right now at 79.14. The bond's slightly up right now. Tesla trading at 181.06. Quite an insane movement. They are stopping the investment into these charging stations that they were developing. These charging stations are going to be used by, they're essentially standardized, so they're going to be used by any other car manufacturer that was going to be developing EVs. However, that's now off the table, and they removed most of the people who were core to that team. Steel Dynamics at 130.77, the dollar at 105.33, and Disney up slightly, just in a consolidation period, really, until anything interesting happens with that stock. Now, Apple, we have earnings. We're going to report Q2 earnings. Massive iPhone slowdown. Obviously, we've been speaking about on this show, there's issues they have over in China. Anticipated pullback in iPhone shipments follows back-to-back quarters of revenue declines out of the greater China area, one of Apple's most important sales regions. Apple stock is off 5% year to date and roughly flat over the 12 months. For the quarter, Apple is expected to report earnings per share of $150 on revenue of $1.50 on revenue of $90.3 billion. This would equate to a 4.75% year-over-year revenue decline. All they have to do in this market is not have it worse. That's about it. So it remains to be seen what happens with that. Apple's iPhone revenue is anticipated to drop around 10.8% to $45.75 billion in the quarter, while iPad revenue is set to fall 11%. Analysts also anticipate both Mac and wearables to decline 5% year over year. Obviously pretty low. Competition from China isn't going away. Apple's obviously late to AI as well, which is a major misstep on their part. Yeah, that's about the news for Apple. So we'll wait to see what happens of course, very, very interesting. And there's a lot of divergence going on right now in the tech industry. And again, I think the major way you can parse these things out is, do they have a cloud, and are they working on chips, right? So if you have those two things, you're going to do well if you're one of these big tech companies. If you're not, I think it's a little bit rough. Of course, Netflix wouldn't necessarily call it tech, but they've done pretty well, and that's for consumers. Let's take a look a little bit about what happened with the Fed yesterday. So, okay, no more interest rate hikes, positive. No interest rate cuts, kind of anticipated. And inflation it's sticky, essentially, right? I mean, he didn't say it out yesterday. I thought it was going to be way more hawkish than it was. It was actually a bit dovish. And on top of that, they're curtailing quantitative tightening. So let me get the numbers for you. So the Fed currently lets up to about $60 billion in treasuries mature each month. They don't replace them. Now they're cutting that like in half, nearly, to $25 billion. So, this is positive. That frees up liquidity and everything like that. So at the current pace that QT is at, it drains about, this is from actually Jamie Dimon's, was talking about this in a shareholder letter. The current pace of QT is draining more than $900 billion in liquidity from the system annually. Obviously, Jamie Dimon always shares his opinions on what that means. But yeah, so on Wednesday, the officials announced that they will lower the rate of QT to $25 billion, and that's obviously more than half. So I think the big thing here is we're trying to hit that 2%. Jobs are strong, openings are strong. Powell is saying they're seeing some normalization of new job openings and people losing their jobs and all that kind of stuff. I still think, I have this hunch, and the more I look at how this economy is transitioning, that 2% level is going to need to be revised, right? I think it is. I think this is a different economy than we have, and I think you're going to start seeing more and more larger kind of names speak about that in the coming year, just because marginally speaking, or relatively speaking, the economy is doing okay, right? I've spoken about there's this divergence between people in different socioeconomic levels, and that is true. I think there's a lot of Americans who are not making enough money, who are living on credit, where that money is going away. They're having difficulties buying houses. I mean, this is legit, right? At the same time, you have another large group of Americans who are still doing okay. These are the affluent ones. And wages are going up marginally, and more job openings are occurring, right? So, I mean, even from this, right? A number of Americans applying for jobless claims remains historically low, right? It's from ABC. Labor Department reported Thursday that unemployment claims for the week ending in April 27th were 208,000, the same as the previous week. That's the fewest since mid-February. Now, I still don't think everything's kosher, even with these numbers. I think there are a lot of people, even ones who are highly educated and have decent jobs, what we would consider decent jobs traditionally. There's evidence that they're having second jobs, or maybe some people aren't getting jobs in it. So it's just weird kind of mix, but I think we're going through a big evolution here in the economy, and what we have currently is going to need to be revised, or the way we treat it is going to be revised. Folks, stay tuned. We'll be right back. We have Steve Rhodes on.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, It has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. This is the Tom O'Brien Show. If you heard me say we had Steve Rhodes on, you need to get your hearing checked, because I actually said Tim Ord. We have Tim Ord of the Ord Oracle. Now, Tim comes on the Tom O'Brien Show every Tuesday and Thursday. If you check TFNN.com, you can go over here to the services page, and we have 2 of his webinars archived on here. Again, these are fantastic. I have to sit here and moderate them whenever they're on, and I learn so much. And if you want to check out the past interviews that Tom O'Brien has had with Tim Ord, you can go to our YouTube page, YouTube channel, and check that out. Just type in Tim Ord TFNN and then hit subscribe and like while you were there. Again, this is Tim Ord of the ord-oracle.com. Go give him a check out after the interview. Tim, how are you doing?
Good. Thanks for having me on again.
Absolutely. We are, well, I'm excited to have you on. This is going to be great. And I know some people in the den are looking forward to your analysis of what we got going on right now. So what are we looking at today, Tim?
All right. So let's take a look at chart 1.
Yep.
And we were talking we talked on Monday. Tom and I were talking about the Zwag breadth thrust indicator, and it had to reach, I forgot what the number was, plus or 0.60 by Wednesday. Well, it never did that. But that's a 10-day kind of a short-term trading technique to indicate bullish outcomes in the market. This indicator is the top window in this chart is the NYSE McClellan oscillator. And it's a little bit longer time frame. There's also a summation type oscillator that measures even the bigger trend. But this trend usually picks out intermediate term lows. And anyhow, the red lines are times when this indicator hits below minus 300, which we did on April 16th, and needs to rally to plus 300 in a month. So it needs to get to plus 300 by May 16th. We're in the process of rallying. Will we get to plus 300? Don't know yet. But the red lines on the chart are the times when this indicator reached below minus 300, and the blue lines are the times that reach plus 300 within 30 days. If you can see, this chart goes back to about mid-2018, and you can see the red and blue lines come at all intermediate term lows. So you need a sign of weakness. After the sign of weakness, you need a sign of strength. And so on April 16th, we got the sign of weakness. Now the market has to show a sign of strength. And I think this indicator has a really good chance of kicking in. We'll have to wait and see and follow it as it goes forward. But as triggered right now, we did April 16th, we did hit minus 300. So let's see this. If we do develop to plus 300 by May 6th, mid-May, then we'll probably, well, that's a bullish move. We'll put it this way. That opens the door probably a rally all the way to year end. Not every week's going to be an up week, but does suggest we'll make higher highs and higher lows as we're going forward. So we'll keep an eye on that. That's another indicator that anyhow we're watching. Let's flip to chart 2.
Yep. Give me 1 second here. All right, we have chart 2 coming over right now. We're good to go.
All right, chart 2. This is a sentiment indicator. So there's a lot of things to look at. You look at signs of weakness, signs of strength, and also you kind of want to gauge what the public thinks about the market. And anyhow, this is the bottom window is the 21-day average of the equity put call ratio readings. And next window up is the 5-day average of the equity put call ratio readings. And the middle window is just the equity put call ratio readings. So when everybody's bearish, everybody's buying puts. So anyhow, the best situation is if the market's rallying and you actually want people to be bearish during that rally. Joe Granville said years ago, the market has to climb a wall of worry for a bull market to occur. And so I'm kind of watching this indicator, see where we are. But anyhow, the bottom window, the 21-day average, was basically a whole month of trading. It's 0.69. The real line needs to be right around 0.7. And 0.69, in my opinion, is close enough. So there is worry out there on a monthly time frame. So we're in a setup, in my opinion, to start a bull move from here, according to the equity put call ratio readings, because people are kind of nervous on the market right now, and that's a good thing to drive the market higher. So sentiment is pretty good. We have a selling climax according to the Mulholland Oscillator on April 16th. So we're getting things that line up for a bull move to occur. So let's take a look at the bigger time frame, and that'd be chart 3.
Yes, sir. All right, we got it up right now.
All right. We talked about the Mulholland Oscillator, which is kind of a 30-day, I guess a 30-day sign of strength type thing from minus 300 to plus 300. This indicator is the summation index. Now that's a bigger time frame. So this kind of looks out over the next year, not the next several months, 4, 5, 6 months, like the oscillator does. The summation index looks out for a year, maybe in 2 years. And at the bottom of 2023, this chart goes back to 2007. But at the bottom 223, it kicked in, and actually that last October bottom also had a Mulholland Oscillator. Actually, give a definition of a bull move using a Mulholland Oscillator. You need a selling climax again on the oscillator, on the summation index. You need a selling climax, and for the selling climax to happen on the summation index, you need a reading below minus 700. And for a sign of strength, then you need a plus 1,000. And this indicator has to do it in 2 months. So on October 27th, we had a minus 700. And on December 27th, so actually 2 months to the day, you got a plus 1,000. So that opened the door of 2024. That is probably going to be an up year. And so far, that's what's occurring. So I don't think any major top is going to form this year, because summation index opened the door for a bull market for at least a year, and it could be a couple of years. We'll have to wait and see. And the summation, that's the reason why I think this is a summation index. And I think the reason why the Mulholland Oscillator, which is page 1 or graph 1, is going to kick in, because the summation that kicked in suggests the whole year is going to be up. So I'm saying this whole year actually looks pretty good, and I think there's at least another 10%, 15% to go before this year's out. And what we just had, this pullback from the, kind of an April high down to a April bottom, is just a timeout in an uptrend. So this is the reason why I think this is going to be a bullish year. So you really should, if you get a chance to buy the pullbacks in the market, this is the time to do it. I hear the music.
Yeah, Tim, stay right there. We'll be right back with this.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have been with Tim Ord of the Ord Oracle, that is ord-oracle.com. We've been talking about some indicators that suggest this is going to be a relatively bullish year. going forward. So, Tim, we were on chart 3 before we went to break.
Right. Let's go to chart 4.
Yes. I think that's a good idea.
This looks at the monthly. I showed this chart before, and it kind of just drag it forward to see what it's doing. But anyhow, the bottom window is the SPX VIX ratio, and the top or the middle window is the monthly SPX. So this is a monthly chart. First thing, the bottom chart, usually this is a monthly time frame, so it looks at the bigger picture. But on a monthly time frame, usually the VIX starts going up before the market tops out. And I want to point that out. Going in the top of 2020, that was that COVID decline. That actually SPX VIX ratio was making lower highs as the VIX was, or as the SPX was making higher highs. Same thing happened going into the 2021, late 2021, 2020, or early 2020 high. The SPX was making higher highs. This ratio was making lower highs. And currently, we're going in. There's no top here, but here over the last several months, the S&P was making higher highs. This ratio also made higher highs. So there's no, on a monthly time frame, there's no divergence yet. But for the S&P to make a new high here going forward above the April high, and this ratio makes a lower high, then we'll have to re-gauge the market. But that hasn't happened yet, so we're not going to worry about it. So, but anyhow, I also want to point out, usually there's a consolidation when the trading range, this is accounts of charting on the monthly SPX, but when half of the trading range is above the upper Bollinger Band, closes above the upper Bollinger Band, then normally the next month is a down month, or at least a consolidation month. And I pointed out the times in the past when that happened with blue circles. You can, going into the high of 2020, half the trading range is above the mid Bollinger Band. Same thing, there was looks like probably August, September of 2020. It closed halfway above the mid Bollinger Band. Same thing happened later that year, and it looks like about November. And back in March, you can see I got circled there in blue of this year. We closed halfway above the mid Bollinger Band, and sure enough, April was a down month. Anyhow,
interesting.
Also got the Fibonacci stuff on here too, taking the March 2020 low, taken it to the high of, looks like it probably December of 2021. The market only retraced 50% of that move. A lot of times, if it can only retrace 50% of the move, that marks the halfway point of the move up. And also, I think there was a head and shoulders bottom there that we had a sign of strength through the neckline. And now if you do all the numbers, you come out with 5,700, which is about 12% higher than where we are right now. And that's a projection of the Fibonacci stuff and the head and shoulders bottom. So the monthly charts look bullish, and there's no divergence so far on any of the monthly charts. So to me, the April was just a timeout and an uptrend. So, and now I bought a little bit too quick, but anyhow, I'm thinking May is going to see new highs, probably June, July, August. I think the trend's pretty. September could see some trouble. That's too far out. But right now, I think the market's actually a pretty good buy area. So that's on a summation. Again, this year looks like a really good year. We got plenty to go to the upside. Next year, I don't know. So,
right.
But
and this 5,700 is actually
we'll have an idea. So.
Yeah, yes, and for everyone who's just kind of started listening, like maybe in the past month, because we have a bunch of new subscribers on YouTube, this target was actually, I believe, roughly similar to what you were calling like in January or February as well. So it's interesting to see this still kind of like being in line with these kind of monthly charts. So.
Yeah, there's nothing to change yet. And we'll get, there's indicators out there on the monthly time frames that the first weakness will show up on the monthly charts.
Okay.
A lot of times. You think would be on the short-term charts.
Yeah.
They don't. They show up on the monthly charts, then they kind of wiggle down to the daily charts. So
Interesting.
Anyhow, we were expecting a down month in April. We did get it. I think April will hit new highs, so we'll have to wait and see how that works out 4 months in. So let's go to chart 5.
Yeah.
I think chart 5 is actually, we're going to flip to the gold market for the next couple, 3 charts. I forgot how many charts it was. But this is the short-term chart. The top window is GDX, and I have a dotted trend line across what I'm thinking is a neckline of a Head and Shoulders bottom, where the October of 2022 was the head. And we're up against the neckline right now. And the market over the last 3 weeks, as far as GDX is concerned, really hadn't done anything. It just sat there, right smack on the trend line. Either it's building energy to bust through that trend line, or it's building negative energy to bust down. But normally, if you're on the trend line, it's not backing away, it's eating supply. So all the sell orders hitting that market right now are being absorbed by the buy. There's another reason why I think we're building energy. Every trading range is actually building energy to build an impulse wave. There's a trading range to build an impulse wave, and anyhow, I'm thinking we're eating through this neckline. The reason why, there's a couple of different reasons, but if you go to the bottom window, this is the 50-day average of the up-down volume for GDX. So in a nutshell, 50 days, that's basically 2.5 months of data. In a nutshell, if it's above zero, which is all the blue area on the market, you're in an uptrend. If it's below zero, you're in a downtrend. And we've been in an uptrend since, looks like the first part of April, eyeballing it there. It's not designed to catch the highs and lows. It's designed to catch the trend. So right now, the market over the last 3 weeks virtually has done nothing. It's gone sideways. But this indicator has actually gained strength. In other words, the up volume is exceeding the down volume. So that implies there's buying pressure coming into the market. So this is actually, market's actually gaining strength without GDX not moving. This suggests we're going to probably have an impulse wave start here pretty quick, where it starts this week, next week, not sure when it's going to start. But this is not a sign of weakness here that's happening. I hear the music.
Okay, yeah, stay right there, because I want to ask you something about it touching the neckline when we get back. Folks, stay tuned. We'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
All right, welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. We are with Tim Orr of the Oracle. Before we went to the break, we're looking at this GDX chart here. Now, Tim, I know one of the things I'm curious about and I'm noticing here, when it touches this neckline, even with this moving average above zero, it seems like now, and I know this isn't like super granular, this is on like a monthly, and so I'm sure a shorter term or a chart that goes through more terms would be a little bit better looking at this, but it seems when it touches the neckline with the moving average above zero, we get a pullback. Is that something I'm misreading, or kind of what would you look at regarding this? Or what would you say to that, I guess?
Well, I'm not sure what you're asking. To me, if this was going to have a pull, so we're up against that trend line, the dotted trend line.
Yep.
The market's traded sideways. If that market was going to turn back down from that trend line, that bottom window indicator would be going down, not up.
I see.
Is that
because I'm looking at when they're touching the trend line.
Closer to zero right now. If it's close to zero, because that's showing weakness. This measures the up-down volume. So when it's gaining strength and the GDX is going sideways, the up-down volume is actually gaining strength here. So this rally is going to continue.
I see. Okay, awesome. Thank you for clearing that up.
So, yeah, but if it was, here's another way to look at it. So if the indicator says that it looks like about, say, or the GDX is at 33.34, and this indicator is around zero at the bottom, then you don't know.
I see. So since it's so much above the zero line, that is indicating obviously it's gaining strength.
Right.
I see.
That's because, if it's below zero at that trend line, then it's going to reject it. If you're above it, especially you're above it quite a bit here,
right.
I printed this chart, we're plus 13. We're not even close to zero.
Okay.
So that's a good indication that you're eating through that supply right there at that trend line. So it's actually, let's go look at the bigger trend. So that's the short-term trend. So now let's go to chart 6. And this is the weekly GDX cumulative up-down volume. Okay, so the bottom window is the weekly GDX GLD ratio. Next window up is the cumulative up-down volume on a weekly time frame. And the next window up from that is the cumulative advanced decline for GDX, and the top one was GDX. And this indicator is a pretty good trending indicator. The blue lines are times when this indicator closed above, when all three indicators closed above the mid-Bollinger Band. The sell signals come when the indicators close below the mid-Bollinger Band. And right now, GDX is still below its Bollinger Band, but it the GDX GLD ratio, which is the bottom window, is still below the mid-Bollinger Band. So I got that circle, or not a circle, but a square in red. But the other two indicators are above the mid-Bollinger Band. And let's go to chart 7 real quick.
All right, we are up right now with 7.
All right, 7. That's the same chart, but it's all blown up because you can see where we are. And as the bottom window, the weekly GDX daily ratio is still below mid-Bollinger Band. But the up-down volume and advanced client indicators are both above the lower Bollinger Band. So there's a good chance that this rally is going to continue. It's a little bit whippy. The monthlies, which I don't have shown, but both of them are still below the mid-Bollinger Band, but the monthlies are the last to turn up because they just move slower than the weeklies, and the weeklies move slower than the dailies. But the weeklies appear to be turning up. And if you go back to chart 6,
okay,
if you go, most of the time you do get a bunch of whipsaws, but a lot of times if you look at the 2019 low, kind of gave a double buy, but once it got above the mid-Bollinger Bands, it stayed there for the next year. So, and I got time frames between the sell signals and buy signals. And at a minimum, they last a year, year and a half, and they can go as long as 4 years. The last time this indicator gave a sell signal was back at the 2021 top, and pretty much remained in a sell signal until recently. And now, we're back above the mid-Bollinger Band. Will we hold this time? I'm thinking we will, because we've got a lot of different indicators on the daily time frames, as the one we showed, chart 5. They're showing still strength here. So I'm thinking finally we're going to turn up, and a lot of these gold stocks have been sitting dormant for years. We're going to start responding because the bigger trends are now turning up. The monthlies haven't turned up. That's the reason why I didn't show that chart, because it'll take another month, if not 2 months, to turn the monthlies up. And the monthlies turn up, then you're looking at multi-years. But I'm thinking over the next year and a half, or even or longer, the gold stocks are going to start responding, and all the ones that are sitting around 2, 3, 5, 6, 10, 20 cents are probably going to come in vogue again. Because I'm thinking something big is starting to happen here. Actually, I think it all started back in 2016, but I'm thinking the small gold stocks are going to start to respond now, because the up-down volume advanced client of GDX, all this stuff is starting to move forward on a multi-month, if not a multi-year uptrend. So I'm thinking gold stock's been out of vogue for a long time.
Yeah.
Actually, really since about 2012.
Yep.
And I think they're just starting to come into vogue right now. So I'm thinking this is going to open the door for some big gains on some of these issues that haven't really had any, any activity for years. Because once these indicators kind of turn up, the generals start off first and the soldiers come out later. And I think some of these soldiers are going to start moving. I have some I'm watching on the monthly charts, and they're starting to pop above the mid-Bollinger Bands, the little dinky ones. So it could be a frenzy in a couple of years, but it's starting off slow so far. But I think as time goes forward, they're really going to speed up. So, so I wanted to show the blow up on this chart. So I'm thinking something big is starting to happen.
Definitely.
And Tom and I even talked about it last fall. I think something big is starting to, and it really hasn't. People haven't really started talking about it, which is good, because when they do start talking about it, it's usually late in the game.
It's the runs there. Yeah.
So far, they haven't started talking about it. So.
Well, and working in the same office as Tom the way I do, he always gives me nice little insights and kind of commentaries and stuff like that. And one of the things that was interesting he was kind of musing about with me was that you have gold move up to these levels, and they keep at they sustain that higher level. Then you start seeing kind of the gold equities, the gold miners start coming along, and I believe you've echoed that as well when I've interviewed you on here, which has been it's nice, and it kind of opens up more things, because now everyone. We want to focus on the tech and all these kind of big names and stuff like that. But, where stuff really pops is those low value gold miners, and you can get insane, percent movements up because of that,
Yeah, you can.
So, Tim, was that the last of the charts you wanted to speak about?
Yep, yeah, that's all I had, those 7 charts.
Fantastic. Well, Tim, thank you so much for coming on with us. It was fantastic as always. Guys, that was Tim Ord of the Ord-Oracle. We'll be right back for a short segment.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We just had a great interview with Tim Ord of the Ord-Oracle.com. If you missed it, you're tuning in late. We're going to have the archive up later on the YouTube channel. Make sure you like and subscribe. It's totally worth it. Let's take a look right now, since we just have a short segment going on. Microsoft, I have spoken at this point ad nauseum about how we don't have enough power to run these data centers, run the AIs, and all this kind of stuff. And Microsoft, I mused that they would probably start getting into energy. Well, then it turns out in January they hired kind of like an energy czar in a sense. And then now, here's this article that Microsoft is making a massive $10 billion renewable energy bet, okay? So it has signed a first of its kind of global framework agreement to accelerate renewable energy capacity expansion. The 5-year deal will help support the development of over 10.5 gigawatts of renewable energy capacity. That's a staggering 8 times larger than the biggest corporate power purchase agreement ever signed. It's going to be with Brookfield Asset Management and Brookfield Renewable. I don't want to actually see what renewables at right now. Up 5% right now, and that is Brookfield Renewable. Excuse me, yes. Yes. Nice, up 5.3%. Anyways, let's talk about it a little bit. Let's take a look. Renewable Framework Agreement provides a visible pathway for Brookfield to build and deliver over 10.5 gigawatts. 100% zero carbon purchase. That's what they're saying it's for, but it is because they need all that power. Now, this is going to have, okay, let's see, a few companies can match its global scale and development capabilities. So Brookfield Renewable has the world's largest operating portfolio with 33 gigawatts of capacity. I mean, that's actually kind of crazy that it's nearly a third then of what they're going to be adding to Microsoft alone. It's leading development pipeline with a staggering 155 gigawatts. A project. This is nuts. So it's solar, which, you know, I argue is not the best. Same with wind. Nuclear isn't renewable, but it is green, at least in some capacity. I can't wait to see what happens with this. And I tell you, a few years in, this is going to be a massive investment opportunity. Folks, thank you so much for joining me today. I believe I'll be with you tomorrow morning filling in for Tommy O'Brien, and then we should have usual programming throughout the rest of the day. Take care and have a great rest of your evening.